Welcome, everybody. Let's see everybody is starting to join. You'll see everybody coming in. I'm Emil from Lyon. I will be your MC for this evening for the webinar. But let's just give everybody a chance to join. Let us know, please let us know where you're from in the comment section on your right-hand side. Please tell us where you're from and also give us in what career you are in as well, please. I see you've got Nikki Fulvioen from South Africa, Pam O'Brien from Cape Town, Meg Miller, Fabio Bass. And please tell us where you're from. You've got Michaela Razanoff from Calgary, Alberta. We've got Arthur Mills from Cape Town, South Africa. Let's just give everybody a few seconds to come and join us. Please, in the meantime, please tell us where you're from and please. Vis, welcome Vis from Johannesburg. We got people from all over this world. It's phenomenal to see everybody else joining us from all over the world. I'm going to give another about 15 seconds just for everybody to join before we get started. Beautiful. So hi everyone, my name is Emil from Lyon. I'm part of the team at the Demartini Institute. I'll be your MC for the evening. The topic for this inspiring webinar is 10 simple actions to change your financial destiny. The program for this webinar looks like we've got 60 minutes with Dr. Demartini with the questions and answers included. At the end of the webinar, we are going to have an exclusive offer with bonuses. It will be for you and it will be for those people that love personal development and that are serious about getting the results that they do want to get. If you stay until the end, we'll have that offer ready for you and we look forward to sharing that with you. But in the meantime, before we get started, you should definitely take notes. So please make sure you can grab a pen and paper. If you don't already have, please get that in handy. And then also, we have had a lot of feedback from students that we are going to put the comment section off when Dr. Demartini starts speaking. But please still put your questions in the question box as we go, as Dr. Demartini is presenting. And then I will take out the questions and I'll put it in. I'll ask Dr. Demartini as we go about the questions. So just to give you a little bit of background, I've been working and studying with Dr. Demartini for the past 11 years. I've been privileged to see a man on a mission. Dr. Demartini has dedicated more than 48 years of his life to study human awareness and potential. And he's read over 30,000 books in 250 different disciplines and has traveled over 8 million miles to share his research and wisdom with people all over the world. And we are incredibly honored to have him here with us today. So, Dr. Demartini, are you there?
I am. Let's see if I got a video. There it is.
Put your. Welcome, Dr. Demartini. Thank you for being here with us today.
Yes, thank you. Thank you.
So, Dr. Demartini, when we confirmed we're going to do this webinar, we had a conversation about what is the principles and actions that people can take in terms of to help them with the financial destiny, and you shared a few principles with me that we're going to discuss tonight. And the first one we got was to complete the value determination process and identify where where financial wealth building is on your hierarchy of value. Can you please elaborate a bit on that?
Yes. For many years, as I've traveled and spoken, I've asked thousands and thousands of people, how many of you would love to be financially independent? And everybody just about puts their hands up. And someone put both hands up and their feet. And then I ask the room how many people are financially independent. And depending on the audience, of course, I mean, if I'm speaking to executives, it'll be a higher percentage. If I'm speaking to general audiences, it's much lower. But most of the people put their hands down. And as a result of it, they reveal a very interesting principle that though 99 to 100% of the people put their hands up says, I want to be financially independent, actually less than 1% obtain it. And in fact, we had 10,000 people one time and just a handful of people actually had financial independence. So there's a big discrepancy between what people say they want and what they actually achieve. And I've been fascinated by why. Why is so many people fantasize about being financially independent, but then they don't get it? I have some indications of it, but one of the things that I discovered is that people have a set of values, a set of priorities, and what their money does is goes to what they value most. So if they have a higher value on buying consumables that depreciate in value, clothes, trips, food, house, furniture, things that when they buy it goes down in value, then they have obviously a low value in wealth building. And if they buy things that appreciate in value, stocks, properties that are rental properties, things of this nature, they go up in value, they're buying real assets. And people who don't have a real value on financial wealth building buy things that go down in value. People who have a high value on wealth building buy things that go up in value. It's pretty simple. And most people, believe it or not, haven't made quality distinctions between what an asset and a liability is, or what something goes up and down in value does. So the hierarchy of one's values dictates their financial destiny. And it really doesn't matter how much money you make. I've actually had a client that I got to work with that made $6.29 million in a year. And at the end of the year, had to borrow $327,000 to pay his taxes because he had such a high value on a fancy house, such a high value on parties, trips, little boat, clothes, social entertainment, etc. He had no value on paying taxes, no value on wealth building, so he had no money. So it doesn't matter how much you make. It's how you manage what you make and what you end up with. And he had an assistant that worked for him that was making $2,000 a month, just a little side assistant. And she was saving $400 a month. So she had a higher value on wealth building, believe it or not. And she was saving and investing, $400 a month towards her financial freedom and was going to get to financial independence before he would. So it's not how much you make, it's how you manage what you make. Your hierarchy of values dictates that. So I encourage people to go online on my website as a complimentary service, go and do the value determination process. And be honest with yourself. Don't write down what you think it should be as the answers, because there's 13 questions you're going to have to ask about what's valuable to you. And don't write down what you think it should be, what you wish it would be, what you hope it would be. Write down what your life demonstrates, because your life demonstrates your values. Every decision you make is based on what you believe will give the greatest advantage or disadvantage to your values at that moment, the highest values. So go and do the value determination. Now, it only asks for 3 questions, 3 answers for each of the questions, 13 questions on it. So the first time you do it, and you go through all the processes that it says, you will end up with a set of high values, your highest values, probably 3 to 5 of them. If you discover that wealth building is not on that list, if it's not in the top 4 values, preferably 3, third value, the probability of you becoming financially independent at that moment, the way it is very low. Pardon me for just being blunt about it, but I've interviewed people that are wealthy and impoverished, and their values are dictating it. I'm certain about that. So if you find that it's not even on the list, and this is going to happen in a great percentage of people that do this exercise, then I would do is do that same exercise again, but this time answer 4 answers, not 3 answers to the question. And that'll extend the number of values you have on the list and give you an indication where wealth building may be. And now you'll probably end up with about 7 values. If you still don't have wealth building on that list, you're almost guaranteed, the way it is right now, to not have money ever working for you. You'll be working for money all your life. And if it's still on the list, then go to 5 answers on that value determination process to finally discover where finances and wealth building is on that list. By the time you get to the 5 answers, you'll probably discover it down there. It may be number 9 or 10 on the list of values in your life. Whenever money comes into your life and you have a set of values, your money gets mostly spent on the top value, a little bit less on the second one, and it goes down. And by the time you get down to the bottom value, you run out of money. You have more month at the end of your money than money at the end of your month. So what happens is, if you don't have a wealth building value to actually learn about wealth building, financial wealth building, not just general wealth, but financial wealth, then what's going to happen is you're going to spend your money on all those things that are way more valuable. Because again, every decision you make with money It's based on what you value at the time and what's more important to you. So if you have a higher value on Jimmy Choo shoes than you buying stocks, an index fund or something, or a stock of Apple, then you're going to buy something that the second you walk out of the store, it goes down in value. You go buy a Tiffany's diamond, the moment you walk out on the sidewalk, if it's $250,000 diamond, it goes to 125,000. It drops to half the amount the moment you walk out that thing. So that's a depreciable. That's a foolish purchase. I know that's going to offend some of you, but it's a foolish economic purchase. You might salvage a relationship, but it's not a wise thing. Better to buy a condo. At least it's going to go up in value and get rental property income. Now, if you discover where it is now and it's at the bottom, and you don't have a very high value on wealth building, you got a choice. Either give up on the fantasy that you're going to be financially independent, because every time you have a goal that's not high in your values that you strive for, you'll beat yourself up because you won't be disciplined and reliable and focused on getting it done. You'll keep procrastinating, hesitating, frustrating because you'll have things more important and more valuable to keep putting your energies to and your monies toward. So if you discover it's low, then we may have to raise financial wealth building up on your list of values. And those of you that have never learned that process, either at my Breakthrough Experience program or getting my Where's My Billion program or my 6 Steps to Wealth, there are a series of questions that you can ask yourself that can raise the value of wealth building. And if you don't do that and it's not high enough on your values, you're going to be a statistic of the 99 percenters, not the 1 percenters. So there are 6 steps that I talk about. I don't know what the question you have. I forgot the questions, Emil. Pardon me.
You can actually go over to that one. That is the next one, Dr. Demartini, the 6 steps of wealth. What is the 6 steps of wealth and how to do?
I forgot what I sent you because it's been a few days. But so if you find out that you don't have a high value on it, you got a number of things you can do. And by the way, there was another question that I think I sent you, but I want to ask that right now. Go and take every dollar you've ever earned in your life. So everybody out there, go and calculate to the best of your ability every dollar you've ever earned from childhood to this day, and calculate all the money that you've earned and brought into your life, and total it up. Then calculate what is your net worth right now. That's all your assets minus your liabilities. And what is your total net worth right now? And then take that amount compared to the total amount you've ever earned and look at the percentage of what you actually have in your hands as a result of all the income that's passed through your life. And if that is a small percentage, like in most cases it is, 1 to 3%, financial independence, unless you have a shift in your values, is not going to happen. In fact, I'm going to make a statement here that's probably going to upset some of you, but I don't care because I got confronted by this at age 28 and changed my life. So I'm doing what somebody did for me to help me. But if you don't save 10% by the time you're 20 years old, if you just did savings on that amount and never raised your lifestyle, it would take you to 65 to have financial independence. If you're 30 years old, 20%. If you're 40 years old, 30%. If you're 50 years old, 40%. If you're 60 years old, 50% of your income right now is needed to save and invest to get you that result, financial independence. So if it's down under 10% and you're over 20 years old, you need to get into gear or need to now come up with an alternative way of generating way more income and way more savings to get caught up. But most people have a fantasy and they don't get grounded, and then they end up going, oops, I thought I'd be by now this place. And then they end up beating themselves up, because anytime you set a goal that's a fantasy that's not in line with your highest values and you don't have the evidence and strategies to get it, you'll beat yourself up. And then you'll self-depreciate and think there's something wrong with you when it's just you setting goals that aren't yours. So first, find out what your values are. Find out where it is. If you have to do 3, 4, 5 answers, determine what ratio of actual income you've actually saved in your life and invested in your life, your net worth is. And then that will ground you and make you realize what the truth is about how financial independence is. Because if you really don't have much right now, it's because you really haven't valued it. It doesn't mean you can't change it, but you got to be grounded and start where you are. If you don't know where you are, and you don't know where you're going, you don't know how you're going to get there, it's not going to happen. So you got a question you want to ask, and that is determine where are you now with finances. I want to put another one in there, Emil. It's not normally on the list, and that is get your financial house in order. And that means go and look at all of the assets you do have, all the liabilities you have, and get it clear. Because if you don't know where you are, it's a nebulous place to start. It's like being on a Google map, not even know where you are, going to where you don't know where you're going. You have no direction en route. So get clear about where you are, because if you don't have your financial house in order, it means you don't really care. And if you really, really are interested in wealth building, you're going to get your financial house, or you want to know exactly where you are at this moment. What is your total net worth right now? Now, if you find out that you have a low value in wealth building and you got low in savings all your life, and you go, okay, I got to wake up now. And do I really seriously want to go into financial wealth? You also have, by the way, the opportunity to forget everything I'm saying here and go to the gym and get yourself looking hot, maybe get some plastic surgery or whatever, and just go and marry a very wealthy man or woman and do it that way. That's an option, but you really got to have a nice profile and bod to pull that off in most cases, or a nice bullshit to pull it off. I'm not against that. I'm all for that if you want to do that. Or maybe you build your own wealth and that. I don't care. But the point is that if you don't have that pathway, the 6 steps to wealth will be helpful. And that is the 6 things that I found common to very wealthy people. And whenever you want to raise a value on your value list, you have to write down the primary action steps that have been proven to work that elevate it. And I'm going to give you 6. There are more you can do, but these 6 are very valuable. And so you might want to write these. And I have 6 steps to wealth audio and Where's My Billion video that discuss this in depth. But so number 1 is the thing that I found common to some of the wealthiest people, and I've been blessed to meet quite a few of them, is that they have a work ethic. They desire to serve people. In the Book of Wealth by Hubert L. Bancroft, that's one of the keys, that they felt by divine providence and human sovereignty, they're here to serve vast numbers of people. If you don't have a desire to serve people and make a contribution to people in some form or fashion, it's kind of unrealistic to expect to have an income. I mean, people don't get income without doing some sort of service. Oh, you could do trades, and you could do, zero-sum game exchanges and trades with people and build wealth that way. It's an income source that way, at least a source of income. That's fine. But the one that's most meaningful is the one that actually increases the productivity cycle, which actually produces a fair exchange in a transaction that's a service to people. That's the one that brings the most meaning. Or you can do both. You could trade and do that. But you want to make sure you have a work ethic that serves people, because there's no limit on who we can serve, and therefore there's no limit on the potential income we could generate. If we're an entrepreneur and we care about serving vast numbers of people, we could create a vast business serving people. So you want to write down 200 benefits to yourself of building a business that serves vast numbers of people, ever greater numbers of people. If you have a desire to do that, you have the desire to go and serve people, you got a source of income. I go around the world and I do a lot of seminars, podcasts, webinars. I mean, today was a full one. And if I serve people, I get rewarded. If I'm trying to expect a reward without service, it's kind of a delusion. So write down 200 benefits of building a business that serves vast numbers of people, ever greater numbers of people. And do not write down the benefits of that is, oh, I'll have my yacht, or I'll have those nice Versace clothes, or I'll have this. That's not the benefit of doing the building of a business. That's the benefit of spending money. And don't confuse, when I ask you to write the benefits of things, don't write the benefits of spending money, or otherwise you're going backwards. Write down the benefits of earning it, serving people, earning the income, because that's where the money is going to come from to start saving and investing and growing wealth. The second one is write a couple hundred benefits of managing that business, either directly or indirectly. By the way, you don't have to run the whole business. You could have specialists run the business, just like you have specialists manage the business. And if you have, we're getting echoes.
Yeah, I'm fine. I can hear you.
Is there an echo?
No, that's fine. It was just a short one. That's fine.
Okay, I'm getting an echo now. Okay, stop. But the next one is 200 benefits of managing the business effectively and efficiently to maximize the profits. You want to work on the business, not just in the business, to maximize the profits. So that way you can get a lower cost and get an echo. somehow. I don't know if anybody else is getting.
No, I can hear you.
Okay, I'm getting an echo. I'm not sure what's happening. You there?
Yes, I'm here. The people are saying in the comment that yes, they are getting an echo. What
Yeah,
is
I'm not sure what the echo is from, but I was getting it. It's going in and out. Let me try again. So write down 200 benefits of managing a business effectively and efficiently so you can maximize profits. And that means you hire people to do the lower priority things so you can extract a greater income by doing the higher priority things and making sure that you're doing the 20% that gives you 80% results kind of thing. You're managing it effectively. The next thing is 200 benefits of saving an ever progressive portion of those profits. Now, that has been the most significant contribution to my financial independence that I ever did. I increased my savings quarterly, and what that did is it drove my business into more efficiencies and allowed my business to grow exponentially and allowed me to become financially independent in much faster ways than I ever imagined. And I didn't have control over what the market would give me as a return as much as I did as increasing the amount I could save. So I just kept increasing my service to people and my degree of savings. And that really did make a difference. So write down 200 benefits of saving an ever progressive portion of profits and electronically structure your investments and savings right out of your bank account. And don't wait for profits, save to get profits. Most people wait, and when they get extra money, then they'll save. That's not how you get wealthy. You save and you get extra money. When you manage money wise, you get more money to manage. That's absolutely an essential component. So if I went to everybody out there and I got to your bank account and I automatically automated a savings into a financial institution, I'll use Schwab as an example because it's discounted and it's the cheapest because I don't need their service. I just need their cheap thing to get my investments going. I just automate it and it's electronically done where I have no emotion about it. You got to get emotions out of the equation and strategies in electronically so you can't screw it up. It just does it, automates it. It's like an unexpected bill you pay every month. You don't know how you pay it at the beginning of the month, but it gets paid. You want an automatic debit going into investments and savings and investments automated. And force that and increase that every quarter. The second you get comfortable with what it is, increase it again. And that has been the fastest way I know to generate greater income, more efficiencies in the business, greater profit margins. That grew my profit margins from a very low percentage to up to 50% and more. And that was that was the most amazing thing I did. The next one is 200 benefits of investing in ever greater degrees of leverage. And this is going to require, because if you really, really care about building wealth, you're going to want to study it. You're going to want to mentor it. You're going to want to study. If you've never read a book on finance in your life, you're really saying, I have no interest in wealth. But if you are going to be wealthy, you need to study it. It's like anything else. If you meet somebody and you're attracted to them, you want to get to know them. Well, if you're attracted to wealth building, you're going to want to get to know it. So I'd recommend that you study it and start reading on that and read, if nothing else, How to Make One Hell of a Profit and Still Get to Heaven. That's a good starting point. Or Little Richest Man in Babylon. But start reading. And then investing in ever greater degrees of leverage. 200 benefits is basically learning how to stair step your investments to greater degrees of risk reward ratios, where you have a better leverage. Eventually you get higher returns on your money, and you've earned the right for that, and you've earned the right to risk that because you built layers upon layers of wealth building. I tell people to build 90 to 180-day cushions and go up to the next class of investments and work your way up to greater leverage and greater risk reward ratios. The next one is 200 benefits of actually accumulating a vast fortune. Because if you don't have a reason to accumulate wealth, the moment you get more than you need, you're going to buy clutter. Most people, when they buy a house, they could park a car in it when they bought it. But after a few years, they can't get the car in because they got too much junk in there, clutter. I love the way I live. I travel with 2 bags, and I don't have any place to put clutter, so I don't accumulate crazy stuff. Just say thank you, but no thank you. But many people clutter, and they buy depreciable things that then weigh them down, and then they have to store that, and so they're paying for really unproductive stuff in their house. So having a reason for building a vast fortune is essential. And the last one is 200 benefits of creating a financial cause that leaves a legacy. Because if you don't have a cause for building wealth, you're probably going to plateau. Let me explain something. If you have zero money and you add $1, the value of the dollar is 100%. If you have $10 and you add $1, it's 1%. $100, or probably 10%. If you have $100, it's 1%. $1,000, 0.1%. 10,000, 0.01%. 100,000, 0.001%. A million, 0.0001%. So the more you actually accumulate wealth, the value of an additional dollar goes down and down and down and down, dilutes. And notice when you have no money and you go to a bathroom somewhere and you got no toilet paper and you pull out $1 to wipe your butt, if you got no money, you won't wipe it. But if you got $1 million, you don't mind pulling out a dollar bill. So what happens, the value of the dollar bill goes down as you accumulate wealth. So if you don't have an increasing cause to continue to drive you to earn more income, you'll get comfortable and plateau and buy junk. And this is what most people trap themselves with. They accumulate stuff. So the 6 steps of wealth are building a business that serves ever greater numbers of people, managing a business where it's more effectively and efficiently, where it's maximizing profits, saving an ever progressive portion of those profits, investing in ever greater degrees, stair-stepping leverage, accumulating a vast fortune, and then having a cause to create a legacy with it. What are you going to do with it beyond your life? And that makes a difference because that keeps you working in a meaningful path and not just live comfortably and end up in debauchery. So I'm a firm believer that those 6 steps to wealth will be valuable. You'll find that Bill Gates is a good example of those 6 steps. He built Microsoft. He and Paul and Ellen made it managed efficiently. He started saving. Believe it or not, he had $27 billion in a money market account in 1999. Forbes magazine showed it in San Diego. He then built and bought investments in ancillary stocks that were relating to his company. Then he accumulated a fortune, and then he built the Bill Gates and Melinda Gates Foundation. That's a common pathway for very wealthy people. I've met a lot of billionaires and interviewed and chatted and found that pattern in them. So that's why I wanted to share those. So those are just at least starting points. So you want to make sure that you have a reason for doing it. So start on a computer and build up those 200 benefits of that. But don't put benefits of spending money, because most people fantasize when they think of building wealth. They don't think of actually doing what it takes. They think about the lifestyle of the rich and famous, and they want to spend money on that lifestyle. And that's not how you get ahead. That's how big brands get ahead, but not individuals that want to build big brands. So those are the 6 steps to wealth. That's the 3rd step on the 10 steps. I think you have the next one, Neil.
Yes. Then the next one, Dr. Demartini, is emotions. What does shame and guilt have influence on our finances?
Well, the next one is if you're in a business transaction with somebody and you agreed up front that you're going to provide this service and they're going to pay this amount, and you give the service and then they paid half of it, but they chose not to pay the second half and they reneged on it, you end up getting narcissistic and demand your money, want your money, or an explanation why they're not paying. And if it's legitimate, okay, but if it's not, you want your money, you get narcissistic. But if you end up in a transaction and you get an agreement and then they pay you the full amount and then you deliver, but you don't deliver it all, and you feel guilty that you didn't deliver it, you'll go and altruistically give more time and more effort to make sure it's a fair exchange. We have a built-in thermostat, a psychostat, an intuitive psychostat to try to have fair exchange. So anytime we feel that we've been shortcutting other people, we go into altruism. Anytime we go and they feel they shortcutted us, we go to narcissism. So anytime we feel shame and guilt, we go to altruistic acts and give away our money. And so if you are carrying around, without realizing it, but carrying around shame and guilt, it will make you feel unworthy to receive and hold on to money. So I would make a list of every single thing that you've ever done in your life that you might feel in any way wasn't fair, that you felt guilty about it or shame about it. I don't care what it is, make a list of it. And then whoever it was involved in that, write down how it benefited them. Because it did, but you just didn't see it. That's why you're feeling shame and guilt. In the Breakthrough Experience program that I do pretty well every week, I have people, when I do what I call column 11, I have people that have been carrying around shame and guilt in their life for decades in some cases. And I show them how to dissolve it. And their self-worth goes up. And their willingness to receive goes up. And the value of themselves goes up. And that's absolutely essential, because until you value, you don't expect the world to. The world's going to reflect what you feel inside. So if you're loaded with shame and guilt in your life because you've expected it. And by the way, the number one cause of shame and guilt, number one cause I've observed, is the second you compare yourself to other people, put them on a pedestal, think they're smarter than you, more successful than you, wealthier than you, more stable relationship than you, more socially savvy than you, more physically fit than you, or more inspired than you, more spiritually aware than you. The moment you put them on a pedestal and minimize yourself, you'll inject some of their values into your life and attempt to live in their values. Now, Ralph Waldo Emerson said, envy is ignorance and imitation is suicide. And it's true. Because the moment we try to live in other people's lives and we don't, it's like a cat trying to swim. It's going to beat itself up because it's not going to swim well. Or a fish trying to climb a tree. It's not going to do well. So anytime you try to live outside your own highest values, you self-depreciate. And whenever you self-depreciate, the compensation for it is the altruistic act, because it's like a shame, and you end up giving away and you don't feel worthy. And you don't feel worthy of keeping money. And people that receive inheritance, I see this quite often. I saw it this weekend. People that receive inheritance and they don't know what they did to earn it. The best thing they can do is write down what they did to earn it so they won't squander it, because otherwise, and other people will grab that money. They'll end up blowing it. Opportunists will take advantage of it. Family members will grab it. They'll give it away because they don't feel worthy of it. So write down whatever you feel shame and guilt about, and write down the benefit to the people that you thought you did something that hurt or was negative or something, and clear the shame and guilt. If you have difficulty on that, get your butt to breakthrough experience, and let me show you how to do that. That could be one of the biggest significant changes in your finances, that alone. I've seen people go to the breakthrough experience, clear that, and now willing to receive. And all of a sudden they go, you know what? They're able to charge for their services. They're able to keep the money. They feel worthy of investing in themselves, valuing themselves. And the world around it reflects that. Because when you value, so does the world. So if you're uncomfortable about that, come to Breakthrough. Let me help you with that, because it's enormously impacting financially in your life. Then if you do have the shame and guilt and you clear it, you'll find that you're more able to look somebody in the eye and say, here's what my service is, here's my fees, deliver the service, maintain fair exchange, and not feel guilty about it. If you can't look somebody straight in the eye on what you're offering and charging for, there's shame and guilt in there. You feel that it's not worth it. You can't sell something. People can pick it up. They know. They know what you really feel you're worth. And it's quite interesting. And I could actually find out what you believe you're worth by the hour or by the day or by any period of time or any package you sell. I could ask and I can narrow it down and tell you what it is. And anytime you charge more than that, you're going to feel guilty. And you're perpetuating the difficulty of receiving. And you'll give away deals. Altruistic people give away deals and give away their profits. And then they don't have any margins. So clear the shame and guilt. That's another component that psychologically can be to everybody's advantage. We're stacking up the benefits of wealth building and clearing out the shame. I'm telling you, it's going to make a difference.
And here's the next step that we got, Dr. Demartini, is complete the 10 questions on steps to financial independence to ground you. What are those 10 questions? If you can quickly run through them, please.
Yes. In 1983, a gentleman came into my office named Jim McKinley, a financial planner. And up until this day, I was good at working, good at making money, not big money, but making money. I had quite a bit of debt at the time, but I didn't have any investments. And I was saving for things, clothes, a car, a trip, saving for things that were where I had to start all over and save again to do something the next thing. It wasn't until this man walked in my office and asked me these 10 questions that my financial independence path opened. And so you might want to write these down. This will be recorded, so it'll be lasting for a while, but you want to write them down. The first thing is you got to get your financial house in order by writing down what are your total assets. And now that takes some thinking. And I really didn't comprehend what that was and had to go do a little research on that and actually write down what the total assets were. In my case, it was a lot at the time. I had a bunch of books and I didn't have any money. And I had debts. And I had, yeah, was not the greatest place. The second question is, what are your liabilities? Now, that was much higher at that time in my life than the assets. And I had a new house, but I bought it at the peak of the market, and that went down, so I had a liability there. And I had cars that I had to pay for, and I had furniture that I had to pay for, and I just was seemed like everything was just I was working on a treadmill at the time. So what is next is your liabilities. The third one is what's the total of those assets minus liability, which is total net worth. If you don't know what your total net worth is, you don't know where you're starting. You need to know what that is. Once I got that, then I asked, how much income do I want to live on as financial independence? Financial independence is not a nebulous number, just abundance. I see that in some church groups. Prosperity, abundance. That's crap. You got to get really clear what that number is. If you're afraid of mathematics, get over it because it's real. You got to ground yourself in the real, tangible mathematics if you want to be wealthy. So I said, what do I want to live on? Now, at that time, a 6-digit figure of $100,000 a year passive income seemed okay at 1983. That would be equivalent of about $500,000 right now, coming in doing nothing. And so I set that as my objective. Then after that, I wrote down the next question was, what is the average interest rate I could earn on my knowledge of investing? Well, that was very little knowledge. And so I didn't even know where to begin on that. And I looked at what the bank account was offering, and inflation was high at the time. And I wrote down 7, 8%, 8% maybe. And so I wrote the number down. And then the next question was, what is the inflation rate, the average inflation rate you're going to face? Now, right now, it's around 2% or less. But at the time, it was higher. Sometimes I've seen some countries really high. Zimbabwe had hyperinflation. It was ridiculous. And you had to carry a wheelbarrow full of money just to go get a hamburger or something, hot dog, and or a banana. But what happened is that you need to know what the inflation rate is because that's going to erode your potential for growing wealth. And it's going to be working against you because they're going to keep printing money, fiat currency, they're going to print money, and fractional reserves going to erode the potential of each dollar. So you have to work against that. And that means you're going to have to earn enough interest and do enough investing to do that. So what is the inflation rate is the next one. The next one on the list is now, which is the assets, liabilities, net worth, total amount you want to live on per year, total interest rate you can earn, total inflation rate. The next one is, what is the total net worth that I need, earning that interest rate minus that inflation rate to give me that amount I want in number 4, the amount I want per year, passively. And so I basically said, okay, let's just say that I want to have $100,000 a year, and I am going to earn, say, 7% off my investments. I got a 2% inflation rate. That means I'm netting 5%. 5% into 100% is 20. So I got to multiply the 100,000 times 20, which means $2 million. So I needed $2 million today, net worth, in order to have the $100,000 lifestyle that I wanted. That's the way it was. Now, if that interest rate is higher and inflation is lower, then I may get by on less. If the interest rate is lower and the inflation rate is higher, I got to have a lot more. But whatever you got to take that and divide that into 100 to give you the amount you got to make. Now, in the process of doing that, I realized that all I needed is $2 million. Okay. Well, but wait a minute. I had a negative net worth. And so I was in debt $100,000 at the time. So I really needed $2.1 million. And I needed that today. So it means today I got to have that. So I thought, okay, I'm saving an average of $200 a month at the average, and I need $2,100,000 today. So I thought, okay, how do I do that? Well, I thought of all kind of crazy things after having a knot in my stomach, kind of an ulcer feeling in my stomach, jaw tightness, a headache, a little nausea feeling. Because I thought, oh my God, how am I ever going to get this? I was overwhelmed by it. I thought, well, maybe someday I can get there, but how am I going to get there today? And I sat there and thought of different ways of doing it. I thought, okay, well, in 2 days, all I need is $1,050,000. 4 days, I need 505,000, whatever it is. And I started giving or 550,000. And I started thinking of all the different ways of doing it. And I finally just said, none of this is going to be real. And I had to stretch it out. So I gave myself 15 years. I set a goal in 15 years, I'll be financially independent. So then I ran it out. But then in 15 years, with the cost of inflation, it's going to double. So I really needed $4.2 million by 15 years. So I went, oh, crap. So I didn't divide that into 180 months to know what I needed to average into my growth of wealth for each month. And it came out $24,000. I was saving 200. I needed 24,000 to be the average. So I'm now completely overwhelmed, thinking there's no way this is going to happen. I'm freaking out here. And I'm thinking, do I really want financial independence? Is this a pipe dream? Is this real? How am I going to serve that many people? I just couldn't see it at the time. And then after realizing the dilemma, I needed a strategy. And I just couldn't come up with a strategy. And finally, I sat there and kind of meditated because I really was getting a headache. And then something came, an idea. And that's where the forced accelerated savings technique came in. And that was one of the greatest days financially in my life. That was the most significant transformative moment because I realized that I could start out at $200 a month. And once I got comfortable doing that and make it a habit, I could raise it, and I raised it to 300. And then I got comfortable doing that for 3 months, and I raised it to 500. And I got comfortable doing that for 3 months, and I raised it to 750. And I got comfortable with that, and I raised it to 1,000. And I noticed that every time I raised it, strange things happened. I got an extra new patient. I got people taking me to lunch that they paid for it, not me. All of a sudden, we found new ways of being more efficient in the business. We started new things that got us new clients. It's almost like the business was evolving to compensate for my commitment and the valuing of myself. So then when I hit $1,000 a month, I ran a projection of where I would be in 5, 10, 15, 20, 30 years and stuff. And I realized I will have $1 million saved at $1,000 a month in 34 years. But I needed 4 point something in 15. So I'm thinking, oh crap, I got to continue with this. So I then raised it. I made a commitment to raise my savings 10% every quarter. So 1,100, 1,210, 1,3443. And it went up a Pascal's triangle, which in mathematics, it went up that way. And at the end of 3 years, I was saving now $2,000. And I'm thinking, okay, I'm now down to 14 years, I'll have $1 million. That's better than when I started. But I didn't stop there. I kept raising it 10%. And so every 2 years it doubled. So then 2 years later, I was at 4,000. And I'm also paying off my debts separately from this. And also getting more efficient in my business and delegating more, earning more income, and getting rid of my house debt. But now I'm at 4,000, then 2 years later, 8,000, and then 16,000, and then 32,000. And so at the 9-year mark, I was at 32,000, and all that I'd accumulated, plus the debt dropping, I actually reached financial independence. I did it. And I didn't need it as much as I didn't need 4.2 million. I actually got by on much less than that because I had accelerated. And what was interesting is then I kept going, but I had a tendency to want to raise lifestyle. So I had to put a little system in place, and I said, okay, I'm only going to raise lifestyle if I'm willing to raise savings and taxes equal amounts. So if I want an extra $1,000 into my lifestyle per month, I got to put an extra 1,000 in savings and taxes. If I do that, I've earned it. Otherwise, I'm going backwards, and I'm now adding lifestyle, which is making it harder to get financially independent. And I followed that like a ritual, and I did it electronically. And then it kept going up. It went up to 64,000, and it just kept going up and doubling every 2 years until it was more than 50% of my gross income. And my business got more efficient. My brand kept growing. New opportunities to get royalties and other forms of income started showing up. When I was valuing me and managing money wisely, I was attracting more opportunities and money coming into my life. And it was waiting for me. If I was waiting for extra money to save, it wouldn't have happened. I had to go and save and get that. And that one thing was the greatest insight in my life. Now, I learned along that way to invest. And I did a forced accelerated savings technique. Then I did a forced accelerated investment technique. And I started buying passive investment income, which was basically a passive index funds and big index funds. And I just put them in there, kept the cost down, the turnover low, and made sure the profits were higher. Because all the actively mutual funds and hedge funds were charging outrageous fees and not beating those at the time. So I just kept doing what Warren Buffett said, buying the index funds. And to this day, they've still been the best investments. And so I now grow my business. I still do those same things. My wealth is accumulated. I got financial independence. And All I know is that at the time I didn't know how I was going to do it, but I just did it methodical. Incremental momentum building steps build financial independence. But you got to be patient. You can't want immediate gratification. You'll speculate too high. You'll gamble too much. You'll let your amygdala run you instead of your executive center. Your executive center is where wealth is built by methodical for planning and having longer term vision. But anyway, that's the 10 steps. And those 10 steps, I can say Jim McKinley, who impacted my life back then, helped me become financially independent without even probably ever getting to appreciate or know about it.
Dr. Demartini, you briefly touched on that. Can you please explain a bit more about the various money buckets that you just touched on briefly now?
Yeah, now this is very important because many people take money in, put it into one big savings place, and then when they have bills to come up, they have to rob it, and they don't like that feeling. So if you know you have taxes, uh, gosh, 35 years ago, I started putting a tax account again in place. 36 years now. And if you don't have a separate tax account where money just goes in every single week into that tax account to pay your quarterly taxes, it's insane not to do that. Because if you have to wait to the quarter and then borrow money to go pay it, you're going to resent taking from your savings to go pay that friggin' government. But if you're putting it away into a tax account and earning interest on it, off it, you're making money off the money that's actually theirs. And you're getting to keep it for that quarter and then give it to them. And you can use it and use it for investment purposes in the meantime. But I do it every week, and I just pay the taxes, and it's just done, and you don't think about it. And little by, it's by the inch, it's a cinch. But if you had to pay your taxes at the end of the year, it'd be overwhelming. By the quarter, it's still overwhelming. By the month, it's not as bad. By the week, it's much easier. If you do it by the day, you don't notice it. But the smaller the increment of time and amount that you do and make it, the less volatile your life becomes and your economic positioning becomes. So pay your taxes. Then you want an depreciation account. Everything that could depreciate in your business or at home, a roof going down, carpet need to replace, computers need to be purchased. Anything that's a depreciable, ask your account what the depreciable scale is, depreciation schedule is, and find out what it averages and find out how much it is a month and set it aside in a monthly basis and have it there. So if something breaks down, you don't rob your savings. You're taking from the depreciation that you pre-planned. Pre-planning grows more wealth. Impulse and instinct responses don't grow wealth. That's an animal. So by having that set aside, if you don't need it, put it in your investments. If you have it, you got it, and then you just pay the new carpet. You do it, and you don't feel overwhelmed, and you don't feel you're robbing your savings. Don't rob your savings and investments once that's there. You cannot touch it. You got to assume it's not there. It doesn't exist anymore. Let it work for you. Otherwise, you're going to rob it, and you're going to start all over, and you're losing compound interest in time. That's the greatest thing, as Einstein said, is compound interest. Then you need a vacation account if you take a vacation. My life's a vacation. I don't give a shit about vacations. But in your life's a vacation, it's a vacation. You're living it. I live a great vacation. But if you need a vacation, find out how much you're going to spend per year, divide it up per month, divide it per week, put an account there, put a little bit every week or in there, every 2 weeks or every month in there, and have a vacation account. Same thing for education. If you're going to go and do education accounts and do seminars and buy products of education, set aside a certain amount per week or month. That's the average, and do it in little increments. If you do it, it's not a big deal. You won't notice it. But otherwise, you're going to feel guilty taking money out, robbing savings to do it. That's why you don't want to put it where your savings are. You want to put separate accounts for it. So anything that's a separate account, that a separate thing that you know you're going to be paying, set up a little bitty bundle or a little bucket for it. Put money in there on a weekly basis or every 2 weeks or monthly basis, and pay it that way. Then when the time comes, you're going to go to a Dr. Demartini seminar, the Breakthrough Experience. You have the money for it. You pre-planned it. You don't rob savings. So you feel bad and guilty you took money from your savings. You have a separate account for that. If you decide not to do it, boom, put that into more investments. But if you have it aside because you managed it wisely. By having the buckets of everything that you'd be spending it on, you're smart. Because when you manage money wisely, you get more money to manage. I guarantee you. Money flows to people that manage wisely. So that's the buckets.
Then, Dr. Demartini, we put up define your primary income source. How would you suggest to do that?
Well, many people, I can't say that everybody is listening to this, but many people are vacillating about what their primary source of income is. Don't go off on secondary gimmicks to try to get rich quick and undermine your primary source of income. It's better to concentrate on your core competence and get clear and masterful at that and build a brand around something, or otherwise you scatter yourself and never build a brand. People don't know what you are and what they do, and you decrease your income from that. So stick to what you are greatest at so you can excel, and don't allow scattering impulsive things. Now, some people are always talking about having multiple streams of income and this and that. I'm okay with that. I have royalties coming in, book royalties. I've got some people I sell my brand and things and leverage things. There's lots of things I do, but it's all around the same thing, the education process. So don't scatter yourself thinking, oh, I'm going to do this and this and this, and then dilute yourself and not do anything pretty good. Unless you can find a common thread and super task it and link them all to one focus and focus on that one thing. And these are just activities you're doing towards that one thing, then it can work. But beware of getting away from the primary source of income. Some people go out there and try to get rich quick through secondary sources of income and undermine their primary source of income. I'll give you a story about it as an example. I had a friend that was a chiropractor many years ago. It was in one of my mastermind groups that I was presenting. And when the 1990s came along, day trading came in. And a buddy of his was doing a lot on the day trading. And during the time in 1997, 8, 9, when the tech stocks were just going nuts, they were doubling sometimes in a matter of a month. And so this guy said, man, the chiropractor got his friend and said, man, I made $100,000 doing nothing and just letting it buy the stock. And that enabled him, because people, when they want to get rich quick and they get a dopamine fix on it, they can become blind and not see things clearly. So he went in and started focusing on day trading and put $27,000 and turned $27,000 into $78,000 in a matter of months. And he thought, man, this is where it's going. Well, he let his focus on his practice go down, and he didn't want to practice anymore. He goes, this is easy money. I don't want to do why would I work so hard on that? And he had accumulated some money. He was nearly a millionaire at the time, but he's putting his money over here. And all the way to 99 and 2000, he was up about 1.2 to $3 million by doing that. And he thought, man, this is for me. This is what I'm doing. But he let his practice die. But then what happened is April of 2000, the entire market crashed 78%. All his money dropped 78 to 80%. When he did, he almost got an ulcer, lost part of his hair. His practice was down in the pits. He had already laid off some people in his office. He did not want to go to practice because it's too slow in making money. He's had a taste of instant money. And he actually thought he was brighter than he was, just because the market was going up. And anybody can make money when the market's going up. But when the market's going up and down, you have to have skills to know what to do with those markets. And so he ended up losing his fortune. And what he ended up with, he wiped out about 7 years of his effort. And he was depressed. He didn't want to go to work. He didn't have any patience. He let his staff go. He was embarrassed. And this is because he wanted to get rich quick instead of rich methodically and patiently through service. And this is the problem with instant gratification. It can skew your appreciation of service and meaning. And if you lose meaning, you end up with debauchery, money for nothing, and then you blow it. So my advice is to be patient and not try to get immediate gratification, and stick to the very core thing. Now, he ended up eventually, after 8 years of trying quick get rich schemes, eventually went back into practice. But he lost literally, 10, 12 years of his financial life, which is not the end of the world. Life goes on, but at the same time, if he had just stayed methodical, the man would be right now at about $15 million. That's what he was on track for in our mastermind group. He would have $15 million, which is enough to at least live on. And in the process of doing that, he has now having to go and add some more time. Now, that's not a bad thing, but he did age during that process, and now he's going to have to work longer to get to that same state. I'm all for working. I have no desire to necessarily stop working, but I would rather work because I'd love to, not because I have to. It's way, way more inspiring to have financial independence, not because you want to just goof off and lay on the beach somewhere, but because you want to do what you love to do because you love to, not because you have to. That's the purpose of financial independence as far as I'm concerned.
If you guys do have any questions, please, you can put it in the question box now. I'm going to put my last point down for Dr. Demartini. And this is one of my favorite Dr. Demartini, owning the traits of the financial greats. If you can please elaborate and explain about that a bit more, because I know a lot of people compare themselves to great financial people.
Yes, I did started reading a lot of texts on wealth building and a lot of mentors. One of the mentors I did more recently, well, it's been a few years, but was Warren Buffett's mentor. Benjamin Graham. I studied everything I could get on Benjamin Graham. I then studied Philip Carrot, which is another mentor of his, and then obviously Warren Buffett and Bill Gates. I tried to study some of the wealthiest people on the planet and identify character traits that they had and behaviors that they did, actions and inactions and traits. In the breakthrough experience, I have a system called Own the Traits of the Greats. If you haven't been to the breakthrough experience, come to the breakthrough experience. That one thing will be worth the course, I promise. There's so much in there that's overwhelmingly contributive to your life, but that is one thing. And I'd use that out of the breakthrough experience, and I take the most powerful people on the planet in each of the areas of life, and I do the Demartini method, which I explain and teach in the breakthrough experience, which I just got interviewed today by CNN on. But I do that method, and when I do, I level the playing field. And I realize that whatever I see in the greatest financial investors, I have those same behaviors, maybe not in the same action ways, but I have the same behaviors. So I don't think, well, they have something I don't, or they are different than me. I realize that there's nothing they have that I don't have, and there's nothing they've done that I can't do. And that liberates you from a lot of comparison and gives you more certainty to just take action. And it opens up playing fields bigger. I mean, the opportunities that in my life from doing that one exercise, wealth-wise and achievement-wise, and what I get to do today is enormous. Come to the breakthrough experience, learn how to do that one thing, if nothing else, because that is going to be a very powerful tool in your life. I mean, I use it over and over again. I just got an opportunity to be filmed for a beautiful new book and movie documentary with Stephen Hawking. And I did Stephen Hawking, Owning the Traits of the Greats, Stephen Hawking, just last year when I was writing a book on astrophysics. So I'm just absolutely certain that that exercise is worth its weight. So come and learn how to do that if you haven't been to the breakthrough. Anybody who's been to breakthrough will probably make a comment and tell you about it. But by owning the traits of the greats and realizing that there's nothing in these individuals that have achieved amazing things financially that you don't have inside you, and allowing you to realize your own values are dictating the form it's in, but you're not missing the character traits, gives you confidence that you can pull it off. And your confidence goes up. And as you know, when your confidence, your energy, and your certainty goes up, so does your wealth potential. So money automatically circulates from those who value it least to those who value it most, but it also circulates from those who have the least order to those who have the most order around money, and those that have the least certainty to those that have the most certainty about managing it. So do that exercise with the wealthiest people on the planet, and that will pay off, I promise.
Thanks for that, Dr. Demartini. The first question I've got here from Patty D. What is the best to do if you have a fear around investing money in the markets?
Well, it depends on what you're trying to do. If you're buying you're taking some dollars and you're buying a particular share or series of shares in a particular stock, it is risky because you're gambling on the fluctuations of that stock. And if you're trying to buy in a day trade or a week trade or a small term trade, you're gambling a bit because you don't know what it's going to do, and it's going to fluctuate probably. The larger the stock, the larger the cap of the stock. The capitalization is the amount of dollars per share times the number of shares that are issued. If the larger the capitalization of that stock, probably less volatility. Doesn't guarantee it, but probably. Mathematically, the probability is higher. A smaller cap stock has a lot more volatility. So if you're taking your money and buying an individual stock and you're dealing with high volatilities, you got to be able to handle the emotions and not sell it. Because if it goes down, that's when to buy it. And if it goes up, if you don't need to sell it, you can just keep it and let it go up. But if you can't manage your emotions, you're going to probably give away your money. Because if you get cocky with money, you'll probably put more money in it and you bought probably overpriced stock. If it goes down, you probably sell out because you don't want to lose anything. You need to be able to govern yourself if you're going to start buying individual stocks. So if you diversify it, the more you diversify it into a broad index, for instance, and you just put it in there, and let it go up and down and never worry about it, never think about it, just keep putting it in there and dollar cost average, you're probably going to end up with a moderate to good yield and never have to think about it. And that is, for most people, probably the least distracting, probably most consistently returning yield you're going to get. You're going to get an average yield based on the mean of what that stock index is based on the capitalization, but it's going to be there. And I've been doing that for 36 years, and my wealth keeps going up every year because of that. I mean, it has ups and downs and fluctuations. I've seen it go up and down $1 million, even more than that. But that's just a fluctuation. I don't pay attention to fluctuations. I pay attention to long-term objectives. And I keep putting money in, just keep putting money in and buying and buying and buying and buying and buying and let it grow for me. And but if you're doing individual stocks and you're doing day trading, you're gambling a bit, and you better know your stuff. You better go get training on that, what to do in trading, because there are skills and technical and functional analysis that you can use, and cycle systems and wave systems that you can use to help that process. But I'm not a gambler. I don't want to do that. I just put the money in there and I leave it in there, and I buy quality stocks that serve vast numbers of people, and I don't want to speculate. I want to get a company that is a company that serves people. You're basically going to get rewarded to the degree you serve. So don't waste your time on speculative things. You don't know what it's going to do in the future, and nobody knows. Buy something that has stability to it, that has, in the future is going to be making money. Warren Buffett is a pretty smart guy. I don't think he's misled anybody. And very few people that beat him in the long run. And he's encouraged people to do a simple passive investment stocks until they have knowledge, specialized knowledge, to be able to select more efficiently. So that'd be my suggestion. And don't try to get rich quick. Just be patient and buy. If you're buying quality, diversified companies that are serving people, you're going to end up with some money. Just stay with it.
And yeah, we've got one great question here, Dr. Demartini. What is the best way to transition from earning money by working a job, and then starting a business? So transitioning from, working a full-time job to starting your own business. What would you suggest that transition looks like?
Well, if you don't know what that service is, first find out a need in society that has a demand. Look, you make money by solving problems in humanity and serving needs. So you don't want to go out there with a fantasy, a narcissistic fantasy of a projection of what you think the world needs without confirming the world really wants it. If it's not searching for a solution, you're going to have no demand. So first go and find out what people want and find out what they're looking for. Then go find out what you would love to do and find out where they overlap. That way you're inspired to go on and do it and find out what people want. So there's a demand for what you want to give. When you have that in order, then put together a business plan. And to go out there without a business plan is not too bright, in my opinion. You need to think through what your real costs are, because if you don't know what your costs are, you don't know what it's going to take, you're maybe setting up a fantasy and then throwing away a company that's got a stable income for a fantasy. So get a business plan together, then take the job duties that you're doing right now, that you're doing every single day, and ask, how is specifically doing these daily actions helping you fulfill your highest values and helping you get to the next step with your new company? And link what you're doing to it. By doing that, you'll see all kind of opportunities in the company you have right now that might actually help you get that other company started. Resources, people, networks, skill bases, leadership skills, and link what you're doing now in your job duty to that new company. How is doing this now going to help you build that company? And then you'll see that it's not in the way, and you'll be appreciative of it, and you'll get more opportunities in that company until you're ready to start your own company. But put the business plan together. Make sure you have a model that works. Don't reinvent a wheel. Make sure you have a demand. Do your market studies a bit and get real. When I opened up my practice many years ago, I took a sample business plan. I modified it, tweaked it, put one of the best business plans together. And then I exceeded it when I opened it up because I knew what I was going to do. And I bought the equipment. I knew exactly what the costs were. I knew what I was going to do. It was not as much of a gamble. So you don't need to have fear and anxiety. Fear and anxiety about taking on a new business means you haven't done a strategic plan that's clear. You're gambling. You're hoping for an outcome. That's the purpose of the Executive Center, to have foresight, to plan with strategies, to mitigate risks, and to dissolve fantasies and make them real objectives that are tangible, and then link what you're doing to that so you can see it on the way, not in the way, and you won't have an anxiety. You'll have a strategy, and you'll know what to do. And if you need help giving people to get feedback on the strategy, get that. And don't rush it. Be patient. Make sure you have a real pathway. Because if you do, when you leave there, you'll be grateful because you'll succeed at it. You'll achieve what you want. And then you'll appreciate the job you had. It's not a mistake, but it was on the way to get you what you want, and there's gratitude. You're not having revenge and upset and oh, I can't wait to get out of that job. You appreciate the job, and you realize it was a part of your journey. But that, make sure you have a plan on it. And if you need help on that, go and get business plans or come to master planning. I have a program on how to do that and how exactly to make those transition in master planning for people. I do it every year for people. And the breakthrough experience is also, I teach you how to do the links on how to do the linking from what you're doing to that next step. So I would encourage you to make sure that you have that in order.
One second. Next question.
I wasn't sure if that was some emergency at the door, but somebody punched something under the door here.
No worries.
The hotel webinar business.
To the life of the hotel. Dr. Demartini, so that leads us also to the next question in terms of, you've mentioned the breakthrough experience, the 2-day, your signature program, the breakthrough experience, and a lot of people mentioning, anxieties and blockages they have, relating to finances. How will the breakthrough experience help us, to break through that blockages and challenges we have around finances?
Well, first of all, the breakthrough experience, I'm going to guess 70 to 80% of the people there are entrepreneurs. They're either solopreneurs or entrepreneurs or heads of companies, or we have all different types of people. And the breakthrough experience is for waking up entrepreneurial spirit so people can do what they really love to do and to raise their self-worth, and shows them how to dissolve all the emotional volatilities that they face, like fear, fantasy, phobia, philia, I call it, grief, pride, shame, anger, almost resentment, any emotion that is distracting you from being inspired and grateful and loving what you do. I show you what those emotions are, how they come about, what triggers them, what exactly questions to ask yourself, and what procedure to do to dissolve those and get back on track where you're thankful and loving again. So if you have emotions and volatilities, that means you're running in your amygdala, not your executive center. And that means you're living by lower priorities, not higher priorities. The breakthrough experience shows you how to live by higher priorities. So your self-worth goes up, your net worth goes up, and your mastery and self-governance go up. If you don't govern yourself, the world has to. If you don't lead your life as a master and govern your own life, which is what breakthrough's about, you're automatically going to get feedback from the environment. Your physiology is going to create symptoms. Your psychology is going to whisper intuition with noise in the head. Your friends and enemies are going to give you support and challenge and criticisms and praise and throw you off with impulses and instincts. And you're going to end up having tragic events in your life to try to get you to get governed. So the breakthrough experience is about how to manage those emotions and become more centered and focused. I call it being grateful, loving, inspired, enthused, certainty, and presence. Because I teach you the science, the Demartini method science, on how to have those states: gratitude, love, inspiration, enthusiasm, certainty, and presence. And that's one of the benefits. I also help people overcome challenges in there, because people are challenged by, as you say, fears. And they're challenged by people that say, oh, you can't do that. Who are you to do that? And people are jealous. See, everybody around you is projecting their values onto you and trying to get you to do what they want you to do. And the reality is, if you can't say no to those and say yes to what's truly inspiring and what is truly inspiring to you but serves people in their values, it's not easy to build the entrepreneurial spirit. So the breakthrough experience is about how to do that. And also relationships. Because almost every relationship you have, whether it's an intimate relationship, a child relationship, a customer relationship, an employee relationship, a vendor relationship, a mentor relationship, any relationship, there's a science on how to communicate what you value in terms of other people's values. Every relationship is a selling process. So I teach people how to do that, how to level the playing field, have equity and equanimity, how to communicate in people's relationships so business transactions are more sustainable. Relationships are not, because you can go out, build your business, go build your wealth, and then undermine your relationship, cut it in half. One little divorce process. So how to manage relationships and communicate effectively and transform relationships with customers, employees, loved ones, etc. I also talk about how to clarify mission and vision and what really a purpose is, because your highest value is where your purpose revolves around. And by determining your values, which we do in the breakthrough experience, and get clear about what that is, if you get really clear and prioritize, you get an inspired vision and you know your mission. And I want people to know what that's like to experience it so they don't have to ask and wonder. Because if you're sitting there waving around and having emotions about it, you're not living by priority. And so I want people to live by priority, because anytime you fill your day with high priority actions that inspire you, it doesn't fill up with low priority distractions that don't. And you wake up a spontaneous leader and expand your space and time horizons and do amazing things. And the breakthrough experience is about that. That's what I want people to get. I want them to know that they have the ability to master their life and not be victims of history. And that wakes up natural born leadership. And I believe that everybody deserves to wake up their leader. And that's what the breakthrough experience is about, is helping emerge the spontaneous leader you have inside you by living authentically according to what you really value. And I show you how to use all of that to empower all areas of your life. Because if you're not empowered intellectually and gaining specialized knowledge and excelling at it, you're probably not going to be able to have a competitive edge in the world. So how do you actually learn and maximize your learning? And I think I've earned the right for that. I've read 30,300 books, and I've absorbed that information. I know how to develop the mind and wake up the genius capacities. So I teach people what I do on that. I teach people how to run the business and the things to become engaged in business. I teach people how to change value structure so they can raise the values of wealth building if they want. I teach people how to communicate into values. I teach people how to wake up their leadership. I teach people what creates illness and what the symptoms are actually giving them feedback to do so they can live authentically, and how to live an inspired life. And you're not going to live an inspired life if you're not delegating. So I go through all of that in the breakthrough experience to help people live more masterful lives. Any area of your life you don't empower, you're going to be overpowered. And if you don't empower yourself intellectually, be told what to do. If you don't empower yourself in business, be told what to do again. You'll be told what to think. If you don't empower yourself intelligently, you're going to be told what you're worth, and the same in finance. I mean, if you don't empower yourself, you can't bitch about other people controlling your life. You have to take command of your life. Breakthrough experience is about breaking through the limitations that are stopping you from taking command of your life. So if you want to go and expand and play in a bigger field of opportunity, you cannot hang out with me for 26 hours. 26 hours we spend. We go from 8 in the morning to midnight at least. And we're on a fire doing what we can to help you master your life. And you're going to learn a tool, the breakthrough on the Demartini method, which is the most profound transformational methodology that I can deliver to you. And I guarantee you'll use that the rest of your life. So I don't know. I could go on about the breakthrough experience. I'm doing it 43 times a year for over 30 years, 1,080 times. And God knows how many thousands of people have been to that thing. But it's life-changing.
That is phenomenal, Dr. Demartini, and I'd like to share, with the attendees the details and the offers that we have available for them to make this available to attend the breakthrough experience. So we've got a breakthrough experience accelerator package for you. So this is to help you to support you with your journey and helping you to become financially empowered. So what you'll be getting is you'll be getting the breakthrough experience, the program that you'll be attending with Dr. Demartini in person. Then you'll also be getting the 12-week breakthrough experience accelerator course. So that is after you've attended the breakthrough experience, where you get more programs and videos from Dr. Demartini to help you to build on what you've learned at the breakthrough experience. And then also you'll get access to a breakthrough experience community on Facebook. So that is all the attendees that has already done breakthrough experience all over the world, where they get together and they get to build on what they've learned and get to share their experiences and to grow more from there. And then also with your booking and with the offer, you also get the #1 selling course, the Inspired Destiny, also valued at $400. You also get that with that offer. And then you also get a one-on-one priority power assessment with one of our consultants. So that is basically, they help you after the breakthrough experience to go through every area of your life, as Dr. Demartini mentioned, to see where you're currently at, to see where you want to go, and to see what's blocking you from getting there. So you even get that support with that also. And then also, what you also get, if you book on tonight, you will get a 10% discount on your booking to combine with the package that we have put together for you. So you'll see below on your page, there is a bit.ly link there that you can either copy and paste into a new tab and take that booking. Then you'll see it will take you through to a booking page. On the right-hand side, you can also go and book on there. It will take you through to the booking page where you can take up this offer that we have put in front of you. And then you can see in what country we are doing the next breakthrough experience, that you can take up the offer there for you to see you at the next breakthrough experience. So please click on the button and then you can go through to that offer. And also, please don't let finances stand in the way of taking up the offer. We do have payment plans also available. We do have our team online that can assist you to be able to make that happen for you. And then we've also got a ticket that you can attend maybe in a year's time, so we can put that in place for you as well. So please take up the offer. Dr. Demartini, do you have anything to add from there?
Yes, I wish I could have gotten to all the questions that came in. Just because of the time, we had to cover all we did. Thank you, all of you, for taking the time to join us. I think there were 12,000 people that were involved in signing up today for this. So thank you from all over the world. Thank you for caring enough for your time and having the energy to listen to me. Some of you will get up in the morning and do this and watch it as the days go on, but thank you for that. And also, as far as the breakthrough experience, somebody asked me, I see on here that will it help in resolutions of conflict? Absolutely. Absolutely will help people in resolving conflict, because that's a very big thing that goes on in almost every business and almost every relationship we have. So I'm definitely addressing that. You're going to actually learn to do that. You're going to actually do that in the program. But the breakthrough experience is an idea whose time has come. And I've been developing it for 30 years, teaching it for 30 plus years now. And I think I've got a quality brand. It's served thousands and thousands of people. And I just know when people come to the breakthrough experience. Last night, I asked at the end of the program, when I did it here in London, I asked, how many of you learned something this weekend you could have gone your whole life and not learned? Of course, I can tell you, every hand goes up. And I'm absolutely certain it's original information you're not going to get anywhere else in the world. And I absolutely love working with people on Saturday night and watching the transformations and people break through whatever they think is in the way of where they want to go. And if they don't even know where they want to go, we're going to help them get there, figure out what that is. So please just come. I can't serve you. I can do a little webinar like this, and I can stimulate ideas and hopefully get you into action, but that's where I can actually make a big difference in your life. So if you would love to spend 26 hours with me, it's going to be a full on, get your roller skates on. There's no rah-rah. There's no jumping up on chairs. There's no, it's a serious, methodical, true commitment to helping you do something extraordinary with your life. You're not going to see life the same way after breakthrough, and you're going to have tools you can use the rest of your life. And so just find a way of coming. You'll say thank you. I promise you.
Thank you for your time, Dr. Demartini. We really, really appreciate your time. And for those that you want to take action on this package we have put together, please go and book on there for you. Everything is available on there. You will see on your screen now. Just to reiterate what you get, everything with it, just to have a brief cap of that, you get the 12-week post-breakthrough experience online course. You get the breakthrough experience that you get to attend with Dr. Demartini in person. And then you also get the online course Inspired Destiny worth $400. And then you also get the one-on-one priority power assessment with one of our consultants. And then you also get access to the Breakthrough Experience community online. The value of the whole package is about $4,500 US. So it's great value. You do get there, but you get it for the price of the Breakthrough Experience that's available to you here now on the webinar we have here for you. And like I mentioned earlier, if you are interested in doing it, but you don't, financing is a challenge for you, please get in contact with our team. We would really want to make this available for you. It doesn't matter how long it takes. We really want to be there to help you to make this available. And Dr. Demartini looks forward to seeing you at the Breakthrough Experience in person.
Yes. Thank you, Emil. Thank you.
Thank you, Dr. Demartini. And we look forward to seeing you again on the next webinar.
Yes, I'm looking forward to it. Everybody, thank you for joining me tonight, and just give yourself permission to do something extraordinary in your life. When you value you, so does the world.
Thank you, Dr. Demartini. Have a good one.
Thank you.
So if you do see this still on the screen of the offer there, please click on there. If you do have any questions, please ask our team on the site in the comment box, or you can go online and we can assist you there to go through with your booking. We look forward to having you at the Breakthrough Experience. And if you do have any questions, please let us know.